Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and the market's reaction to reopening. And Phil, the question is, could the resurgence of value suggest the old economy is about to recover?
Yeah, I mean, values actually had a couple of days of quite strong performance. But if you look at even broad market indexes, remember a few weeks ago we talked about how the Nasdaq 100 was doing a lot better than the broader market indexes. And what we're seeing the last few days with the return back to work is some of the Dow and the S&P outperforming the Nasdaq, so catching back up a little bit. And it looks more than just a value versus growth play. It looks a little bit more like an old economy coming back play from investors.
Yeah, and if we take a look at our second chart here, you can even see it with ETF flows, that value ETFs are popular with investors.
Yeah, we've been watching. So this is an interesting table. It kind of looks at ETFs that have had decent price moves, decent volume in value traded, and also are trading a lot more volume than normal. And we kind of combine all that together. And the last few days, we've definitely seen small cap, we've seen financials, and we've seen value pretty active, which I kind of interpret as ETFs are used by a lot of different kinds of investors, and they're also used by some pretty sophisticated investors with good macro models. So, when people are trading different ETFs at different times, you can probably learn a bit about what's the focus in the economy. And you can see the financials have actually had a pretty good bounce and good rally. Small cap were really oversold during the meltdown in March. So they've probably got some catching up to do as well. The other ETF that's almost always in there is the Jets ETF for obvious reason. Airlines were, one of the companies that I guess in the March sell-off were forecast to potentially have bankruptcy problems. And as rescues have come through, and recently as there's been a little bit of an uptick in passenger traffic, and as the airlines are sort of announcing more people and more ways to get people on the plane safely, that has been a sort of thematic ETF that's been really actively traded.
Yeah, I mean, airline stocks, some of them were up, double digits yesterday on these small little pieces of good news. And in our next chart here, when we look at the economic data, we're seeing a little bit of proof of life here with mortgage applications back above what we would consider normal levels.
Yeah, pretty surprising, right? That considering we're all theoretically still on lockdown, people are trying to buy houses at levels even higher than the peaks of the last few years. Potentially, that's people looking to move out of the city to the suburbs, which is another topic that people are talking about, sort of the boomers and all of the Gen Xers moving out to the suburbs, and then even the millenniums. But it's interesting just to see that this is even though everyone's at home, there's still activity on that front of the economy. When we look at other areas, I mean, we've been talking about how the data has stopped getting worse and some of the data has started to get better. If you look at same store sales, you can see that they have actually started to bounce a little, but obviously still well below the levels that they were at before coronavirus hit. And then you look at something like hotel occupancy. It's a little bit like airlines. I mean, hotel occupancy got down as low as 20% of normal just after everybody sort of shut down. And it's starting to creep up. It's now up at 30% of normal, which is still extremely low and not great news for hotels, but at least the trajectory is right. And it's starting to look a bit like that swoosh that people were talking about a few weeks ago, where the shutdown was fast, getting people back into the gear of trusting all the people around them and knowing that it's going to be safe to sleep in a hotel or hop on a plane or get on a train and go to work and sit in the office. It takes a bit of time. It gets people's confidence levels up. But it seems to be slowly happening, and that's good news for the economy.
All right, let's wrap up with our last chart here as we look at innovative ways to contact trace with COVID-19.
Yeah, so this is a really interesting study that it's been known for a while that coronavirus actually passes through in your poop. And so people have been measuring the levels of coronavirus in sewage. And this is from New Haven, but you can see it's clearly picked up as actually leading the cases that people saw in that region. So it could be a really good indicator of whether there's a second wave in a locality. And especially because it leads, it could let people kind of go back into lockdown for that locality much more quickly, maybe focus testing in that locality and work out where the outbreak is coming from, even before the asymptomatic cases spread it to other people who become symptomatic, who then go and get testing. So it sounds like a dirty job. I'm not putting my hand up for it, but it looks like a really useful data set.
All right. Whoever gets the most clever title for that index, get a free trip to MarketSite. All right, Phil, great to have you with me as always. Thanks so much for joining.
You're welcome, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.